Hello, everybody. Welcome to XM live trading session in the beginner's room with COT report session. My name is Junaid Vahid, trader analyst in Forex and Structure. Started trading back in 2011. As a full-time trader, I'm using price action swing trading as a strategy, as a trading method. In my analysis, I'm using basically everything that can help me. I do top-down approach and bottom-up approach also. In my top-down approach, I start with the macro picture, so I'm using fundamentals. I'm going for market sentiment and liquidity and analyzing the technicals. As a trader, I'm a technical trader. I'm using price itself to trade, but I always try to support it with other information to increase the confidence and probabilities. From the bottom-up approach, if I see a good opportunities from the stock fundamentals, so I can check the macro picture, or I will if I see a good technical picture, then I'll try to support it with the fundamentals related to that instrument to increase the probabilities. Again, it's all about probabilities that we are trading. There's nothing guaranteed, unfortunately. In the future, we don't know what's going to happen, but we can increase the probabilities by studying markets, understanding the big picture. Okay, so this session is basically um, related to one of the best way to analyze, let's say, the price, the markets, the market participants' decisions. That's commitment of trader reports. We had a lot of sessions about it, but commitment of trader reports, it's way to analyze the market and understand who is doing what. I never used it as a trading strategy in my trading career, let's say. Probably I took a lot of ideas from the COT reports, but I try to not to rely only on one data to trade. I know a lot of traders trading COT reports in one or different ways. Some traders are using it pretty much relying on COT report as a strategy, just looking at it as overbought, changing the uh, sentiment indicator, where actually it produces great signals by using its components in different way. There is also COT report traders and analysts are using it for additionally support their view on the price action, on fundamentals, or anything that pretty much reflects the real volume, the real movement on the market, because it's um, portion of the uh, bigger picture. Okay, that's what COT report is. It's from one exchange, Chicago Mercantile Exchange. If you get the data, that represents what big boys, retail traders and commercials and the producers of the soft commodities or banks are doing in the markets, that clarify the picture significantly for you as a trader. It's usually a swing trading um, instrument. If you are going to use it as a trading instrument, it's not good for day trading. I cannot say that it's a good also for the interweek trading. It's for long-term positioning and long-term swing trading, because it gives you the dynamics for the markets. It gives you the tendencies among the instruments that big institutions are trading, large traders, um, commercials, and retail traders. More often, traders are using retail traders as a contrarian sentiment. So if they are buying, you need to go against them, because you know that retail traders mostly they are losing in the markets, like 70, 80, sometimes over 90% they are losing on the markets. That's why if you want to be a winner, rather go against the losers. That's the best strategy that you can do in order to become a successful. So do what losers are doing. Do the opposite of what losers are doing. And that's definitely going against retail traders. Not all retail traders are losing, but vast majority, like on every business. Okay, in every business, the vast majority are the losers, the minority are always the winners. Not everybody knows how to make the business, and not everybody knows how to trade very well. Emotions are basically the biggest enemy, and that's why COT report basically helps to trim these emotions a little bit and see the real picture. So what is the COT reports? Last times I've showed what is actually COT reports as a real data from its source. Okay, they come with CFTC website or Commodity Futures Trading Commission. where they are releasing the data on. I'm directly showing you the website. It's an official website, so I don't think it's a problem. It's even like ending with .gov. Okay, you go for CFTC website, all right, if you want to get the real data of the COT reports. The reports dated February 25th, and the current disaggregated reports are released on this date because they are released once a week. They are being collected and prepared on Tuesday, and they're being released on Friday. So every Friday you have CO2 reports. If there is not something like, let's say, bank holiday or some official holiday, something, they might release it on the next week, but they are basically doing it on Fridays. You have agriculture, petroleum products, natural gas products, electricity. You have disaggregated futures only, and disaggregated futures and options combined. You have the long format, short format. You can saw the current traders in the financial future. You have a lot of the instruments here. Okay, and what we are looking for, you have Chicago Board of Trade, we have Chicago Mercantile Exchange, Chicago Board Option Exchange, and you can basically look at this. This is where we are actually watching the information we need as a traders and the instruments we are trading. You have the long format and you have the short format. Well, basically we can click on the long format. I have clicked something, sorry. Okay. Just 1 second, guys. I lost it. There we go. So we can basically open in the new tab, going like this, and open the short format in the new tab and check what we have here. That's the ugly picture of the COT report. Like basically, you don't have, this is the shorter format that most of us are using. It's shorter format. This is the long format. Basically, if you go for COT reports, and you can have all the information you need for the non-commercials, for commercials, and the total positions. You go for non-profitable and net reportable positions here for that specific instrument. Change in the commitment from February 18, very important information. Percentage of open interest represented by each category of trader. Number of traders in each category, that this is the long format. If you go for a short format, you have again non-commercial, commercial, and total. You have non-reportable positions. Then they have long trades, short trades, and what's the spread between long and short, right? Then you have commercial long and short trades. You have and total number of long and short, and that basically shows the open interest for this instrument. So if you have high open interest for the instruments, how many trades they have, how many contracts they open, this is basically showing if it's a strong market or weakening market. Because if the open interest is decreasing, then the volume decreases. It's not that strong market. If it increases, this is giving you really great information that market is getting interested in this instrument, and it might work as a let's say relative strength index for technical traders, as a strong instrument, especially if it's at the end of the a trend, and the open interest is decreasing for some time, and out of nowhere at the top of the trend in the consolidation you have open interest rising, and this could say a lot about the instruments. Maybe the short sellers are joining at the top of the trend, seeing that the long traders, bulls, cannot handle that high price, and we can see changes in the trend. So you check what kind of trades they are doing, and if there are changes, you might take decisions. So basically, you can see that non-commercials, we're going to talk about the categories in a few minutes. Non-commercials have long positions, short positions, and that's the spread. So how many long positions they have? 1,658. The change from the 18th of February 2025, it's 90. Percentage is 7.7 of the open interest, And the number of the traders here are 7. There are more short sellers here on this instrument by having 150, and the change open interest for the shorts are way higher. All right, so we have more bearish oriented instrument. This is the dollar Malaysian crude palm oil, which is something that we don't trade. I'm just using it to give you an example. So if you go down, you're going to see butter, milk. These are soft commodities, you know, food, non-fat dry milk. And you go down, lean hogs. You have live cattle, lumber, feeder cattle, you have cheese, you have Canadian dollar. So you are getting on a Forex futures, all right? So you have Canadian dollar. You see what's the interest on Canadian dollar. You have a Swiss franc, all right? You have Mexican peso. You have British pound. You have Japanese yen. What's going on with Japanese yen? Commitments. We have what's going on here. Let's see, non-commercials are doing 171.751 longs, and the shorts are way less than the longs. You see, longs are dominating here. But it's the most important thing here. It's not who is the bigger, like it's important, but the change is more important. Are the longs are decreasing or increasing? And what about the shorts? Are they decreasing or increasing? Let's have a look at the change from 18th of February. 24,185 contracts being bought, put it on the long position, and 11,226 were trimmed for the shorts. Okay, they are trimming their shorts and they're increasing their long positions. That's quite bullish for Japanese yen. Okay, and the change is 13,000 contracts difference. Okay, so the open interest is high. We have also this longs from commercials. Look at here. That's very interesting. Commercials have 93,060 long positions, 202.005 contract of short positions. And the change here, that's very interesting. It's increasing with longs are increasing with 9,000 contracts, as short are also increasing with 47, close to 48,000 of contracts. All right, that's a huge number. The total number suggests that we have almost equal, which is hedged, of course. Shorts are slightly higher, and they have slightly higher exposure than the buys, right? Overall, okay? So I say overall, but what is important here is the battle between commercial and non-commercial in this case. And what is this? This can help us to see the real sentiment on the market. This is non-reportable positions. These are retail traders, not like me and you. They are still like us, but they are trading on the future, on the spot market, on the future market, not like us on the CFD. CFD for me, it's better in this case, but it depends again the goals. CFD, it's replicating the prices on the markets, and we are just trading the price differentials. We don't care about anything else. We don't care about expiry dates and so. Of course, if we don't trade the dollar index, which is also a future, CFD future still have its expiry date and etc. But this is, you check the data and you see what these guys are doing here, and you go the opposite. All right. So you don't want to follow the retail traders, because what we said, retail traders are mostly losing in this market. So you can check our broker's disclaimer. This gives us a lot of information about what traders are doing. 75.18%. Well, they are not a lot. Like, think about 25% of traders are making money. And if the broker has around 10 and over 10 million traders, 25% is huge number, right? Over 2.5 million traders, just going like dummy way of mathematics. Most probably it's not like this, but just logically, like statistically thinking, 25% is a huge number of profitable traders nowadays. And nowadays, this number improves because of the available data and information that we have access to. Okay. Once upon a time, it was very difficult to find information. It was very difficult to do everything fast with AIs, with algorithms, with everything. Like you can find information that fast. There was not information was well, when I started trading, there still was a lot of information, not as today though. But think about the times before my start. I started 2011. Like, think about before 2000. when the internet was there was no internet available for everywhere, and traders were completely like I would say type of blind, no information. They are reading papers, old information, and etc. And that's why the number was over 90 all the time until today. The number decreases significantly among brokerage companies. The reason for that is the huge information nowadays.